All right, well, let's get one comment in. Sarabjit Kour Nangra joins in now from Angel Broking to give us the view. Sarabjit, what is your response to the earnings from Tech Mahindra?
Yeah, broadly looking, whatever I've seen so far looks like the numbers have beaten expectation, and be it revenue numbers, rupee revenue, I assume dollar revenue also they will be beating up. And even net profit is better than expected. Even if you remove, I think, the extraordinary that you have pointed out, I guess still there is a huge upside in terms of net profit, and also margins have been at least better than our expectations.
Okay, I think we have the dollar revenue number that should flash in a bit. As of now, I mean the Q2 dollar revenue, if I'm not wrong, is $1,011 million. That compares to $989 million.
Okay, so 1011 is bang in line with street expectations. That would be a growth of about 2.2%. Our street, the consensus poll was 1010. So compared to that, it's 1011. So that's bang in line with street expectations. So roughly, I think these would be largely in line with street expectations numbers. Some internals that have gotten hold of, the utilization is inched up to 77% versus 74%. So that's driving the margin beat, the margin improvement to the tune of 160 basis points that we've seen. So that is one aspect. It's America which is driving growth yet again. So we're still trying to calculate what the growth of America will be, but America is clearly one driving aspect. It's so the attrition rate has gone up a tad bit to 20% versus 19% last time around. So that's something that you need to look at.
And they have also added 150 million plus client, Rima. It's gone up from 13 to 14. The largest of the client size, over $50 million, that's gone up from 13 to 14. So that's what we have at this point in time.
Right, Ravi Menon of Elara Capital also joins us on the phone line from Mumbai. Ravi, the EBITDA margin, or the EBIT margins rather, are bang in line with expectations at 13.66%. How did you read into the numbers, and what do you expect the stock to do here on?
So my expectations were actually slightly higher. So I was expecting 13.85% in EBIT margin and dollar revenue of 1,020 million. So 1,011 is a disappointment on that score. But yeah, margins are actually pretty good. I think the margin recovery that we had expected, that's happening at least. And revenue, hopefully, they'd make more positive commentary about the second half than what we've seen from both TCS and Infosys, hopefully.
So is there anything in these numbers that will provide an impetus to the stock? Because, the stock is down 15% this year. Anything in these earnings that can cause a rebound?
I don't think so, because the revenue growth is still tepid. I would say 2.2% is nothing to really cheer at. Everywhere looking at close to 4% in constant currency terms. I was looking at 3.2% in dollar terms and another 60 basis points cross currency impact affecting it. So that compared to that, this is a letdown against expectations. So I think, this is. I don't really expect a positive reaction to this result.
Okay, in constant currency terms, Rima, the revenue is up about 3% quarter on quarter, and in dollar revenues up about 2.2%. Any more details that you have?
Well, prima facie, these look like in line with consensus expectations. Some internals, it's America which is doing very well for the company. Remember, America drives about 49% of the company's overall revenues, and that has gone up by 4.8% QOQ, adding on to the 5.6% growth that it saw in the previous quarter. So America is the growth driver for Tech Mahindra. Europe continues to grow subpar. Even in the previous quarter, it had a negative growth. This quarter, it's seen a growth, but it's only a little less than 2%. So it's lower than the company average, and that maybe could be explained because of BT or British Telecom, which has been under pressure. Rest of the world has contracted for the second straight quarter.
The new client, the client that I was talking about could be Nordic, Rima. That's being explained in the key wins that you have in the press release that the company has sent. There's some quote from the CEO as well that will flash on the screen, but as of now, what would you say tomorrow morning? What should the stock do?
Well, I don't expect too much of a reaction because these are in line with expectations. Yes, the stock is an underperformer. It's the biggest loser on a YTD basis in the IT pack. Its valuations are attractive, but these numbers were factored in considering the improvement that it's seen from the early, at least June, July lows. So the improvement that we've seen in dollar terms, 2.2%, some margin improvement has been factored in by the street. So I won't expect too much of a reaction. One disappointment has been manufacturing because manufacturing this quarter has contracted by 0.2%. And in the conference call that the company held in, at last quarter, they indicated that manufacturing is expected to be a strong vertical, and that is not played out. So that is a bit disappointing. Even on utilization, it's been the key growth, it's been the key margin driver for the company, improving to 77 versus 74%. And that also was something that the management had alluded to.
I'll have to interrupt you here. GAIL's numbers also flashing on your screen. Net profit of 440 crore versus CNBC TV 18 poll of 553 crores. So that's not looking like a good set of number, but that's GAIL for you. Year on year, of course, if you compare the numbers, it will look really bad. But if you compare it to poll as well, that's 440 crore versus a poll of 553 crore that we had. Let me just go through all the documents to see where this hit is coming from, because in the past, of course, there's been problem with the natural gas division for GAIL, and that's something that we'll be watching out for. So that in the transmission services, the natural gas number is 575 crore versus, if you look at quarter on quarter number, that was 393 crore. What else? Petchem is a loss of 236 crore versus a loss of 300 crore, again quarter on quarter. And LPG is a profit of only 72 crore versus 276 crore quarter on quarter. So that really is the number where the hit would have come from, or the LPG looks like could be the area of problem. At least that's what the prima facie number tells me. But Varinder will also join us in a bit.
The EBITDA margins have fallen quite a bit to 6% versus a poll of 8.6%. Also, I think, Anuj, the Petchem business has seen a big fall year on year in the top line. So 798 crores versus 1281 crores. Same time last year.
It's an upstream company, so we would rather look at quarter on quarter numbers, because a lot of these numbers are dependent on what's happening in crude, what's happening in natural gas. So quarter on quarter makes more sense for some of these upstream companies. In fact, let's go across to Varinder and maybe he has some more details. These numbers clearly are below estimates, Varinder.
Well, clearly, you mentioned right, an EBIT of 844 crores. Our poll was 1070 crores, a margin of 6%, and our poll was 8.6%. So they are below, and profit also, is below the what we were expecting. And as you rightly pointed it out, the bigger problem has come in the petrochemicals segment, where earlier the loss was 300 crores. It has come at 237 crores as an EBIT loss. People were expecting, because the volumes are picking up, so that loss could even narrow further, but it hasn't happened for the company. The saving grace, of course, is only the natural gas transmission services business, where we are seeing on a quarter on quarter basis, the EBIT has moved higher. But even if it's LPG, on LPG also, you are seeing a fall of nearly 30-35% in terms of EBIT. And look at LPG and liquid hydrocarbon segment, from 276 crores it has fallen to 72 crores. So it's a big hit which is coming there as well. Most of the analysts are at 300, 320, they are bearish in the stock, and most of the people were estimating that the company will report bad numbers, but not as bad as what they have reported right now. So clearly expect a negative reaction of the stock in the morning.
Clearly, and keep in mind, it does not report any subsidies now. It does not contribute for any subsidies, and that's also been made clear in statement of accounts that for the quarter and for the half year, the contribution is zero.
And also, there is an other income component. If you just see on a quarter on quarter basis, 300 crores compared to 79 crores. So there's an additional kicker of that.
The EBIT is 520 crore versus 736 crores. So that's clearly quarter fall of 200 crores or more than that.
Exactly. So even if you remove that 200 crore component, which is additional because of the other income, then the profit could have been at least 200 crores or 220 crores, if that is the case. So other income also, pushing up the net profit number, which is not a good sign.
But of course, keep in mind that GAIL is a consensus sell. I mean, there are very few stocks which are consensus sells, and GAIL is a consensus sell, and the stock has already fallen 44% from its recent highs, because the market knew that earnings over the next few quarters would disappoint. But a lot of people believe that it's still not factoring in the kind of earnings decline that you will see quarter on quarter going forward.
Okay, so we've run out of time. Just to summarize, two numbers that have just come in, both have been unimpressive. GAIL has been disappointing, but Tech Mahindra as well, just a 2.2% dollar revenue growth, much lower than all of its peers like Infosys and TCS that have done 6% and 3% respectively. So unimpressive set of numbers from Tech Mahindra and weak numbers coming in from GAIL. On that note, we will have to wrap up on this edition of NSE Closing Bell. Thanks for watching.